What's up traders, Cam Hawkins here from Trading Nut. Welcome to this third in our series of smart money concepts by the team at Ariel FX. We've got Nathan Jester on the show again today to break down a whole bunch of really clean smart money concept setups so you guys can really understand this concept. Also, he'll tell you or show you how you can actually trade this even with a low win rate and still come out on top. And there's a reminder in here about the live stream that they're running on the Trading Nut channel. So this is actually a live trading live stream. It'll be coming every fortnight. So they actually gave away $100 in the last one, and they're going to give away some more money on the one that's coming up. So if you do want to take part in that, it was pretty easy to try and win the prize. So guys, if you do want to take part in that, you've got a chance to walk away with a bit of cash as well. So let's get on with this episode 3 in the Smart Money Concepts series. Righty-ho folks, I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners, and the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description, then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck folks, and we'll see you in the cup.
Hello fellow traders, welcome to episode 3 of the Smart Money Concept series here on Trading Nut. Big shout out to Cam for making this all possible. I'm so excited to be going over more smart money concepts with you guys today. The strategy that literally has revolutionized my trading. I've been trading it for over 3 years now. I've passed so many funding challenges. Our clients have passed so many funding challenges and used this in their trading and have been actually able to retire from their jobs because of such the high risk to reward that this offers. This isn't a 1-to-1, a 1-to-2, or even like a 1-to-3 type of strategy. This is a strategy that you can achieve 1-to-5s, 1-to-10s, 1-to-20s within your everyday trading. Allows you to make huge returns, minimizing your risk. And the great thing is you don't have to be overall profitable. Your win rate can be less than 50%, and you can still achieve overall consistent profitability because of the high risk reward trades. So I'm going to show you exactly how we enter into our trades and scale in to get these precise high risk reward setups. So I'm going to go over 4 different pairs with you, 5 different trades. We have two on Gbp Usd, 1 on Aud Jpy, 1 on NZD USD, and 1 on USD Swiss franc. So these trades are all hindsight-based trades. However, we have sent these in, or some of them, into our VIP community. Some of them were after the fact, meaning hindsight. I wanted to go back and find the best looking smart money concept-based trades for you guys so that you can understand the concepts. Even though these were not taken live, you can apply these same concepts to your style of trading, just as we do each and every day within our community, to be taking similarly looking trades just like these as I'm about to go over with you. So I'm going to first start off by talking about Gbp Usd. And as I always like to start with structure. Okay, structure is the most important thing you need to look at in regards to your trading. Okay, so any strategy can be profitable as long as you are following the overall trend and sentiment of the market. So let's first start off Gbp Usd on the higher time frames. I'm going to go to the 4-hour here. I like to start with the 4-hour and the daily time frame to see where we are going. So overall, we are quite bearish right now. Even though we are overall bullish in this market, higher time frame, the current trend on the daily time frame is still bearish. We are still below the daily 50, the 4-hour 50 EMA. The 50 EMA is used by banks and institutions. I like to use it for overall direction within my trading and identifying higher time frame trend. What we can notice here is 1.3. You can see 1.3, which is this first blue line. Okay, we're coming into an area of demand here, an area that price has reacted from in the past and has produced an expansionary move from. Okay, so we can see higher high, higher low, higher high in the market. We're having this overall retracement, and because of 1.3 is such a psychological level, we can expect a reaction from that level. So scaling in to the 1-hour time frame, we can see clearly that we reacted perfectly. And this was, if you watch our Smart Money Concepts, or Smart Money Sundays, I should say, video series on YouTube that we release every single Sunday going over market sentiment and what we expect, A couple Sundays ago, we pinpointed 1.3 as the reversal for Gbp Usd, and it has hit it to the exact T. I think the low of that candle was 1.29999. All right, so perfect tap into that psychological level. We actually started to form a Wyckoff schematic, an accumulation in price, a slowdown in price, a break of structure, the test, and then the expansionary move back to the upside. So if you guys understand Wyckoff, you would probably have pinpointed this exact long opportunity from in and around these levels here after the break of structure, the pullback, and you could have got a high risk reward trade on that. But going based off smart money concepts, we can see the accumulation in price bouncing off of 1.3. Okay, we're trading up, we're trading up, we're trading up. We're having this overall pullback. So when price hits a psychological level and has an accumulation, just as we've seen here, it's not always this pretty. If we can identify that, we have to identify levels that price could potentially reverse from. Well, technically, we are still in an overall downtrend. Lower low, lower high, lower low, lower high, lower low. So probably a nice area of interest to be looking for shorts would be in and around this supply zone. And we can see clearly we never really had any sort of reaction, and we just busted through that and closed back above this level, breaking the structure, creating that higher high. So now we are short-term bullish, long-term bearish. So this would be an opportunity, if we can find one, to potentially take a counter trend trade. That is the only way I would take a counter trend trade. Is one, I have all my confluences for that particular setup, and two, it is lower time frame counter trend bullish or bearish depending on the direction of the counter trend break. In this case, we counter trend broke back to the upside, a bullish breaker above this level, creating that higher high, so I can be looking for that counter trend bullish run. So where could price potentially be coming up into before maybe selling off again? Well, I have to understand that we are still overall higher time frame bearish, even though I want to be potentially buying this pair. We can see that we have a higher time frame level of supply, an area of consolidation. Okay, we have broken that level of consolidation, but never retested it. Okay, we just continued to push down. As we have broken structure, as noted before, my target, if any buys are going to be in order, are back up at 1.32700, which is a retest of this supply level and the fill of the imbalance. Okay, just repricing ourselves back up into these highs here. All right, so back up into these highs into premium pricing. So lower low, overall push a lower high for a potential lower low formation, because we still are very bearish. However, we did react off that 1.3 level. Could this be a low in the market where we go higher high, higher low, higher high? Potentially. We could potentially see that. However, my bias is still bearish on this pair. So any buying orders need to be getting out at 1.327, because this is the highest probability area of interest that price could reverse from. As I always say to my members, it is not about how much you want to make trading. For instance, this was a 1 to 9. What if someone wanted a 1 to 20? They wanted to make 20%. Why would you put your trade at a 1 to 20 just because you felt like you wanted to make 20% in a trade, or 300 pips? I guess this is 15 pip stop. Why would you place your take profit there because you want to make that much money? That's not how trading works. You have to place your take profits at areas in the market that could potentially have a high probability of reversing from. So as I always say, take profits are just as important as entries. So you never want to do something like that unless we have actually broken higher time frame structure back to the upside. Then we could be taking more of a long-term position. But this is not a long-term position. Hence why you get in, you get out. That's why when we took profit at this level, yeah, we pushed up a little bit more, but then the overall pullback commenced. Potentially, an overall leg to the downside could be in order. So that's why we were able to get in, get out, and have what I like to call a little drawdown on take profit, meaning, was our take profit very precise? Yes, it was. So now, scaling into this level, I'm going to go to the 1 hour time frame.
Hey folks, with so many crypto exchanges to choose from, why not choose the best one for you? And here are 3 massive reasons why my sponsors Bitget are the perfect choice for traders. Number 1, they're ranked among the top 10 largest crypto exchanges for derivatives trading, which is pretty good, right? Number 2, they've got a trading competition that gives you a chance to win a heap of Bitcoin. So if you haven't got any Bitcoin, great way to get some. Number 3, their copy trading platform not only allows you to follow profitable traders, but you could earn crypto by letting others copy your trades too. So to get involved, click the link in the description below or in the card above, and then follow the 4 steps and you're going to get $153 in rewards or up to $3,000 tether as a bonus.
So I'm actually going to go to the 30 minute. I look at all of these demand zones or price manipulation points that price could pull back into before continuing in this counter trend bullish run. So now that we can see, we have sprung, meaning we have broke structure counter trend after hitting a psych level, after accumulating in price, we can assume the trend is currently bullish on a lower time frame. So we can see that this doji candle, this last sell to buy here, we pulled back into it. I didn't buy it in here. I'm just noting these different demand levels in the market to potentially play off later. So we're respecting all these demand levels. All right, we reacted from this level, then we created this sell to buy, very violent move to the downside, taking liquidity in here. We can see on a lower time frame that a lot of liquidity was being built up in and around these levels. Just zoom back over to it. Okay, we had ascending liquidity here, very strong reaction, taking the stop losses, taking the liquidity, coming into the demand very nicely, pushing up, breaking structure back to the upside. So where is our next point of interest? Well, we know that we always want to be buying at discounts and selling at premiums. So we want to be, we pull a fib, we want to be buying below the 50%. Okay, so a valid area for me would be this 1 hour, maybe it was the 30 minute. Yes, this 30-minute inefficiency. We can see the sell to buy candle that we formed, all right, the institutional based selling volume before the expansionary move. We have the imbalance that started right there. That is a great entry to take off of the pullback. Okay, because we have swept liquidity coming into demand. This is a high probability candle going counter trend. Where would you place your take profit? Would you place your take profit right at 1.327? However, this was not the entry. I didn't even see this until we were about over here. So noting that we're respecting these demand levels very nicely. We have this last level of demand here. We pushed up, we pulled back. Why didn't I buy it from this level? Well, we never made a higher high. So we actually came down into it, sell to buy, and then we took this high here. So noting the fact that we took this high here and we closed above it indicates to me that we're probably not going to be trading below this level. Now, you may ask, well, we made a lower high and then a higher high compared to this high. Why did we take an entry at this level? Well, at this point, you have to, it's sometimes hard to explain. It's just really something that you see through experience over time. But the easiest way of trying to explain it is the fact that we never took higher time frame structure and the fact that this hasn't been mitigated yet. Could you assume that this level here is valid? Yeah, you could. You could have easily taken a long trade from that level, last sell to buy volume. However, this was the candle that actually swept the liquidity that came into this demand zone. So this is the level of mitigation I'm looking for a price to come into, and we never hit that. So the fact that, yes, we did break structure here and made a higher high, we created equal highs. So when price started to pull away from that, sometimes what you'll see is a fake out break of the previous higher low, and then a continuation to take out liquidity. Understanding that this is the draw on liquidity of the market, we're looking to attack this liquidity next. We can look to take trades in and around demand zones at discounted prices. So we did not see a mitigation of this last sell to buy, so that is where I placed my entry. The buy limit, 1.312550. Continuations all the way back up into 1.3270. So this is a 1 to 9.63 risk to reward. and it played out very beautifully. All right. Now, as we continue, we can see price having that reaction from that level of interest that we noted before. So now we are starting to fall. Okay. Will I be looking for any more buying opportunities? Potentially. It is not a bad thing to be trading counter trend as long as you have the proper confluences that go along with it. What really gave me conviction for this next trade I'm going to talk about is the fact that we did come into that psychological level and accumulate in price. So I'm looking at these last points of demand, which I'll talk about in a minute, as potential reversal zones for a potential long trade. Now, if understanding that we're still overall bearish in this market, what if we get something like this? What if we get an area of demand, right? And then we have liquidity being built, and we have a sell to buy coming into that demand, sweeping liquidity, breaking structure, creating that sponsor candle move. What do we buy in an overall downtrend? Well, in this case, I would, because all the confluences there are met. So this next trade goes over just that. I'm going to go down to the lower time frame, the 5-minute, and discuss what we have seen here. So now within this lower time frame bearish move, we have started to build liquidity. Equal lows, well, not really equal, just ascending liquidity for price to take. We swept it, sell to buy, had a little bit of a pullback, and we continued, and we broke structure. Where's the structure here? Very important to understand structure. Lower low, lower high, lower low, lower high, lower low. Lower high, lower low, higher high. So now we should expect, because liquidity has been taken, we broke counter trend structure, and this last sell to buy actually came into an area of demand right over here. Look at this demand. You see how we originally pushed down into this demand, which I originally talked about a few minutes ago with this sell to buy move? Well, on a lower time frame, we had our very last sell to buy candle and the inefficiency. We can see the wick here and then the wick there. This is just straight inefficient pricing. No selling was offered. It was just straight buying volume. So we came back down and we reacted from that level. So what gave me conviction was not just because we swept liquidity and came into the level. It was because of the reaction. I would not have placed a buy limit here. I would have waited to see the reaction. Now, if we were in an overall uptrend, if we were making higher highs, higher lows, it still would be nice to see the reaction and the counter trend break before getting in off the pullback. However, I would probably have, a better chance of having this play out if I just had placed my buy limit there. But because we understand the structure is overall bearish and we reacted from that level that I pinpointed before, and now we technically broke structure here. You can see the higher high and now the lower low breaking structure. We don't want to just be placing buy limits as we go down because we're technically still bearish. The only way we would want to be buying this is if we get a reaction from an area of interest after a sweep of liquidity and we break counter trend structure back to the upside. That's exactly what we got. So we broke that counter trend structure back to the upside, and we can see that our last point of demand, this sell to buy that was not fully mitigated here with this pullback, needs to be mitigated. Also the imbalance between this wick and this wick, it's just straight buying volume. Also, because of the fact that we came into a prior demand, we can clearly have an understanding and clearly note our new level of stop loss, meaning we don't have to place stop loss below this demand because we already came into this demand and then broke structure. We can just place stop right below this last sell to buy. So you could have easily done that right off of the imbalance 1.30618, taking this liquidity here too, looking for that higher high to be formed because we broke in structure. So sell to buy, break structure, higher high. We're expecting a higher low and then a subsequent higher high, and I think that's what we got over here. So this is a nice 1 to 10.75. Guys, if you don't have to be overall profitable trading this type of way, even though the market presents these sort of smart money-based trades almost every single day, because that's how the market moves, you don't have to win every single one of them. And we don't win every single one of them. However, the high risk to reward setups are what allow us to be overall profitable in the market, regardless of if you go on a 1, 2, 3 trade losing streak. You come back and hit this trade, now you're up, a lot, 10.75%, maybe losing a couple trades beforehand. So now that we have gotten into this market here, where do we target? Okay, now this is very important. Well, our first take profit could probably be here. Where could price potentially reverse from? This is an area of supply, all right? Even though we made a higher high, a higher low, and we're looking at a higher high, we have to still remember we're overall bearish, so maybe taking some partials at this supply zone just in case we react and go short and make a lower low. Overall, I would probably take profit at 1.3180 because, let me just go to the higher time frame here, 1 hour, because what we have seen was the overall lower low, lower high in the market pulling back up into that level as discussed. Now, we have made a new lower low in the market. We have broken this counter trend here, right? A lower low has been formed as compared to this prior low. If we were going to maintain bullish structure, we would have reacted off of something in here to go long again, but we didn't. We broke structure back to the downside. So now what we're expecting is any bullish volume coming up this way probably should be met with something like lower low, a lower high, and then a lower low overall, right? So we should be looking at areas of interest that price could potentially react from. Where is that? Most likely this supply zone right in here, okay? And we understood this is our supply zone. Our last buy to sell is right in here, 1.3180 psychological level. And if I pull a fib from here to here, it's near that negative 27% fib, all right? So that's where you would have taken profit and you would have bagged a nice 10.75%. And it's looking like now we are going to continue with our overall bearish direction as per the higher time frames and now probably the lower time frames now. All right, so that is Gbp Usd. I'm going to be going on to Aud Jpy. Aud Jpy was another counter trend trade that played out very nicely for us. So with counter trend trades, you don't want to be targeting massive, targets like this. Why would I want to target like a 1 to 17 at 86.5, for an overall pullback when we're still so bullish? You can see the momentum here. So we have to understand that when placing our take profits as well. If you're going with the trend, yeah, your take profit can be larger if you're targeting higher time frame levels, but since you're counter trend trading, you really need to be looking at intraday type of trading. Get in, get out, look for areas that could potentially reverse from. So let me start with the 15-minute time frame. Obviously, we have recognized that we are overall bullish within Aud Jpy. But what we can see here, actually, let me go to the hourly. We can first see that we started to push down, right? That doesn't really mean much to us. We're still making higher highs, higher lows. We came back up, filled in balance here. No trade was taken, and then we made that lower low. Okay, so that kind of confirmed to me that maybe we're in a little bit of a pullback phase now. This is not considered a lower low. This is considered a higher low, right? Because we haven't broken the structure yet, meaning higher high, higher low, higher high, higher low. This could have easily just made a higher high, but it didn't. It stalled out and then closed below this level. So now we can consider this lower high and lower low for a potential overall pullback in the market for another expansion and move, which is what we're seeing now actually over here. So going down to the 15-minute time frame, we're looking at reactions from each supply level here. So the 1 hour imbalance fill was right there. We created a supply, made that lower low, pulled back up into that supply, chopped around a bit, reacted from that level, pulled back up into this supply, and then broke structure again. So we broke structure again, creating that lower low, and we actually formed equal lows, which is so great. I love forming liquidity before pulling back to a sponsored candle move. So this was an area of interest, our last buy to sell, and I think it was in the 30-minute time frame. Yes, it was. Our last buying volume that came up into supply before the overall bearish volume commenced, that broke structure, created that drawn liquidity to be taken entry 92.58 at the open of the buying volume, had very little drawdown. This is only about a 1 to 4. I would have targeted 91 because targeting these equal lows coming into a psychological level for this pair, 91. You could have also probably targeted 90. This is also a very key psychological level for this pair, but unfortunately it didn't pull back enough because we're so strong to the upside. We just saw a little bit of a retracement for then another continuation. So take profit 1, could have easily been, as we have broken structure here, we can see higher high, higher low, higher high, higher low, higher high. Broken structure, you could have taken a little bit of profit off the table, more profit at 91 when we took this liquidity, and then held the rest to maybe overall profit around 90, psychological level. And then that position would have been hit out break even because you would have put in your stops at break even. So it wouldn't have hit the full position here, but you still would have secured partials along the way, which is so important. You never want to turn a big winning trade into a break even or losing trade here. So great setup there. Hopefully you guys can start to see these smart money concept-based moves. Now with other strategies, you may go based off of trend lines or other retail type of movements, having not a clear understanding of where the entry should be. Maybe you place it off of a bullish engulfing or a bearish engulfing candle. All retail type of patterns. Smart money provides the exact to the pip entry point. Yes, it's not going to react to the pip every single time and get a wick entry, but you will eliminate a lot of risk. And this is why, this is a 1 to 7.13, right? You're able to get these high risk reward trades because you're pinpointing these exact regions of price that have the highest potential of reversing from. So we have noted that 91 psychological level, take profit 2, hit 90 overall. Obviously that did not hit, and then hit us out break even there. And then we just continue back to the upside because why? We're overall bullish. So that's Aud Jpy. The next one I'm going to go over is NZD USD. NZD USD is very nice. Obviously we can see higher time frame. We're bullish. We should be looking for buys. Okay. We can see here 1 hour time frame. This is our last point of return, our last point of demand, our last selling volume before the expansionary move. It's also the imbalance fill. We came down into that level. What did we do prior to that level? We created liquidity. 30-minute time frame. You can see here equal lows were formed, right? Sell to buy. We never got that closure above this level. Yeah, we wicked above it, but we never closed above it. So I wouldn't consider this a break of structure. That's why we probably came back down further into the demand here, right? So waiting for this to happen, reaction from the level here, okay? The real sell to buy move. Now we have closed above it. The counter trend has been broken. Now we're looking for pullbacks to get in. What further, did it for me was the fact that we created higher high, higher low, higher high, higher low, and the actual higher high up here closing above this level of price. So now that we have hit a higher high, we expect another higher low to be formed for then another higher high in the market. Okay, so now we have identified a key level of price on NZD USD. We go down to the 15-minute time frame. That is right here. You could have actually, I'm going to start off with the 1 hour. You could have done this. I would not have been mad if someone had taken a trade right here. Technically, this is the start of the last selling volume before the expansionary move, right? The last sell to buy. So this entry here, yeah, it would have been a bigger stop loss, probably not as good of a risk to reward, but that wouldn't have been a bad place to take a long from. So if you had done that, you would have gotten in a little bit of drawdown, but then you would have made money. Now let me go down to the 15-minute now and find more precise entries. So we can see here, and I've said this so many times in my other videos, is this intermediate level of demand here. We can see the sell, the buy, but before we had the expansionary move that broke structure, we had an intermediate level of demand. So we sold, pushed up, sold off a little bit, and then had that full sell to buy move. So this intermediate level of demand acts as repricing in the markets. Repricing in the markets. This is a high probability level that price will pull back to mitigate from. Okay, we can also see that I believe it's on the 2-minute, maybe if I'm not mistaken. Yes, it is on the 2-minute. That we also did have our last point of return, our last selling volume that came into the demand, that swept this liquidity, that left imbalance between this wick and this wick here before the buy. So our last point of demand before the buyout. This could have been another area of interest to look for. So we have 3 areas of interest. We had one at that 1 hour open, right, the last selling volume. We had one at the 15-minute intermediate demand, and we had one at the LPOR, last point of return demand. Okay. So where would we have taken our entry from? Well, this is another thing that you guys can start implementing into your trading. If you're not sure exactly which level to take it off of, pull up your risk to rewards. I'm just going to create risk to rewards on each level here. Okay, stop loss obviously below the overall low here. And then take profit. I'm going to go over why 0.703 was key for this level, or for this pair, in a minute. Well, we can see that this is a 1 to 3.5, this is a 1 to 5.4, and this is a 1 to 12, essentially. Now, if you wanted to, you could take each of these positions. If you risk 1% per trade, which I do, you split each of these positions up 3 times. So you risk 1/3% here, 1/3% here, and 1/3% here. So even if price just came down and obliterated the stop loss, you would have only lost 1% instead of 3% for 1%, 1%, 1%. Treat this as one trade, not 3 different ones. So now, if price comes all the way back up, hits our take profit, what kind of return are we going to be seeing? Well, just divide 3.5 by 3 because you have 3 positions. 5.4 by 3, 12 by 3. Now, this last point of demand was never hit. You would have gotten an entry here and here. It would have totaled about 2.98%, about 3%, let's just say. So understanding that, would it be smart to take all 3 trades here? Well, obviously, after the fact, yes. In hindsight, for sure. But let's just say this never happened yet, and we were getting ready to place this trade. Well, you have to understand how profitable you are. Now, Forex is not all about, these entries that we're talking about. It's about numbers. And here's another key tip that you can start implementing into your trading. If you're doing something like this, calculate the total percent return and percent risk that you would be getting if you placed 3 trades just like this. Altogether, you would lose 1%, but total, if you have gotten into this trade, which is 12%, right? 12% divided by 3 is 4. 5.4% divided by 3 is 1.8. And then 3.5 divided by 3 is 1.16. So you add all of them together, 1.8 plus 4. So you would have totally had a reward of a 1 to 7 on average. So 7% return for 1% potential loss. So doing something like this is very highly probable for you. Meaning you can still lose 6 trades in a row and be profitable. Gives you that high risk to reward. Now let's just say that this one was never hit and you just had these 2. Well, the risk to reward on these 2 would be still 1% risk because you're risking all of this, right? But you would have only gotten 5.4 divided by 3 and 3.5 divided by 3 actually happens to be about 3%. Would this still be smart? Probably. A 1 to 3 risk to reward is not all that bad. That means you can still be 33% profitable and be break-even trader. You just need to be above 33%, and then you're fine. Well, what if it only hit this level here? Okay, it never came down to our secondary entry. Well, 3.5 divided by 3 is 1.17, let's just say. That means you would have had a 1.17 to 1 risk to reward. Or 1 to 1.17, excuse me. Would that have been good? Well, that means you need to be above 50%. So understanding your worst case scenario. Your worst case scenario is that you only hit this level here, you don't hit the rest, and you go long. Obviously, well, you would have lost 1%. That's worst case, but secondary worst case, I guess you could say, is only hitting the first entry instead of the 2. So you would have only made 1.17%, risking 1%. So that means if you know that you're above a 50% trader, in your win rate, that probably wouldn't have been the worst decision in the world to take, especially because you have confluence with it. Now, let's just say that your risk to reward on this was a 1 to 2, and this was, whatever, and this one was whatever down here. Okay, so you could have done the same thing. Divide each of them by 3, you're risking 1% total. You have 3 different positions. Well, let's go again. What's the worst case scenario if we only have gotten into the first trade? Okay, let's just say this is 2.1%, right? So 2.1 divided by 3, you would have had a 1 to 0.7 risk to reward. That means you would need to be more than 50% profitable. You would need to be 70% profitable in order for this to be a valid trade for you to take. So because the risk to reward on these are so high, because we've identified this to be a very accurate take profit level, this is deemed to, you can definitely do this. You can definitely break it up. However, if you deem like maybe 699 right here to be an accurate take profit level and your risk rewards aren't that high, then what's your worst case scenario here? If this is 2.1 like we just did before, then you're risking 1% to potentially only gain 0.7% if only the first one is hit. Granted, if all 3 are hit, yeah, you would have, you would make more, obviously. But just going based off of your confluences, 1, 2, 3, not all the time are you going to get your secondary or third entry here if you have potentially 3 entries. So it's good to think about the numbers here, the probabilities, what win rate you have, what's your risk to reward. Tying this all together, guys, I'm telling you, are going to turn you into a professional trader. Professional traders do what I just talked about. If you're just looking at, oh, I'm just going to enter here, this looks good, not having confluence, well, that's the worst case scenario. You're just giving money away. But if you understand, confluences and stuff, and you have, a keen smart money level of experience, and you understand smart money and how this works, and you can identify this setup, and maybe, you're a good smart money trader, but your risk to reward isn't there, is it really the best to trade based off of your overall personal win rate and stuff like that? Maybe not. That's what separates the bad traders from the mediocre traders. But what separates the mediocre traders from the professional traders is not only taking into consideration confluence for your trade, but calculating the numbers. What's your worst case scenario? Is it good enough that would, if I averaged out over 100 trades, my win rate to be 50%, am I overall profitable with my risk to rewards above 50%, even if the worst case scenario happens if I only get into this trade? Hopefully this makes sense. If it doesn't, send me a message. I'll be happy to get on a call with you or talk about it more. I'm always about helping you guys. I really want you to understand these concepts, because this is really what transformed me from a mediocre trader into a professional trader, is not only understanding the concepts and the technicals, but understanding the numbers behind it. Calculating your risk to reward, your win rates, all this stuff is very key to take note of and collect all that data, because maybe this trade wouldn't be a good trade for you to take. How do you know if it is? Well, you got to look at the numbers. Numbers don't lie. So hopefully that made sense and you took some value from it. So overall, 0.703 is our overall level. Why is that? Well, if I just scroll out, you can look at highest probability areas that we could reverse from. Well, we have an area of supply here. We have an area of supply here. So any one of these levels would have been nice. Scroll down. Where's our fib? Just simple stuff like this. There it is, negative 27, 0.7030, psychological level. It's probably why we're seeing a reaction from it. Guys, this is just, you guys need to start doing this. If you guys don't do it already, your take profits are just as important as your entries, I promise you. Negative 61, probably around 0.7050, psychological level for that pair as well. Probably would have been viable for your overall take profit. But for more partials, it would have been secured at that level. You would have hit your partial profit to the T. And then even if it just completely died from here, you still would have bagged most of your position because you have multiple take profits. It's just how smart traders operate. Okay, not saying I'm the best trader in the world. I'm not the best trader in the world, but just having the understanding of how professional traders work and how they calculate risk and their exits and their entries and their stop losses and calculating the numbers is really what's going to transform your trading. Last one I want to go over with you guys is USD Chef. USD Chef was very, very good. Had a lot of smart money confluences with this trade. Overall, what are we doing? We're bullish. I mean, I can get a 5-year-old in here and ask her or him, is this going up or down? They would tell me it's going up. Cool, it's bullish. It doesn't have to be difficult, guys. It's common sense. All right, 4-hour time frame. Higher high, higher low, higher high. Last point of demand, imbalance fill. Demand in here, sponsored candle move. Liquidity run, sell to buy reaction from that level. Came up, created relatively equal highs. We pulled back down into this demand zone here that reacted off this demand, and then we made another higher high overall. So higher high, higher low, accumulation in here, expansionary move, higher high again. We're looking at discounted regions of price before buying up again. Okay, so what happened within this last point of demand? That could be a potential reactor or reaction from price when it pulls back into that level, which it did. So let's scale into the 15-minute. We can see that we had that point of demand here. We had the move away from it. The equal lows, draw on liquidity. Okay, the fake BOS, right? Lower low, lower high, lower low. Don't get fooled. BOS, you can see this sell to buy in here. BOS, many people probably would have taken it off of here, off of the pullback, and would have longed it. But we made equal lows. Don't be buying near equal lows. Wait for the lows to be run, which it did. Sell to buy into this demand anyways. This was our level of interest in the first place. So we had the reaction from that level, and if we scale out to the higher time frames, we can clearly see where the imbalance is. Our last sell to buy sponsored candle volume, buying volume here between this wick and this wick is imbalanced. We want to fill this imbalance around 9195. I always enter trades around these 0 figures. So 9195, 92, 912, 922, 92250. It's never like 91954, really, because price reacts off of these psych levels, these round number figures. So that could have been an entry. But what did I just talk about before? Sell to buy, intermediate demand zone. We have it repricing, and then the expansion move again. If you had bought it off of the imbalance move here or this doji candle, right, I wouldn't have been mad at all. That would have been a great entry still. You would have had a little bit of drawdown, but that's fine. That's still a great entry for you to take. You could have went the imbalance fill, the full fill there with our last sell to buy. Either one would have worked, to be honest with you. And you would have gotten to the tip. 91947 was the low, 3 pipettes difference. I don't know if you guys can name me a strategy that is so precise like this consistently. So hopefully you take some value from this. You take what I'm trying to teach you and try to start implementing it into your trading. I'm telling you, you're going to see a lot more profitability. But if you guys are already profitable with another strategy, well, that's great. I mean, congratulations. But I'm just trying to give you guys another perspective as to how you could potentially be looking into trading the Forex market. So that could have been your entry there, 91950. And understanding that we're overall bullish, higher high, higher low. This is probably our higher low. The reaction has been seen. We're starting to push up now. So we're looking at making another higher high. We also have equal highs. What is this? Draw on liquidity. This is what probably the market makers are going to look to attack next. I love equal highs when entering into a trade because that's where we're going to probably target, right? It's just an excuse to take the liquidity. It's just an excuse to push higher. It's an excuse for this area of interest to work out and continue with its bullish momentum. All right, so let's find out where we would want to take profit here. So 91950 is our entry. Where's our stop loss? Well, below the sponsored candle volume, which is right here. Right, so let's go 32 and a half pips, just to be safe. Take profit. Well, we want to make a higher high. We're overall bullish, right? What if we were overall bearish? Where would we look to take most of our position? Probably right here. Our potential supply, right? Just because if we're overall bearish, we could see this as a pullback for the continuation, but we're overall bullish. So that's why we can now target higher time frame levels. So let's zoom out. Let's go to the daily. What do we see? Well, you can see here we have this area consolidation in price, the supply level. All right. So this would be a perfect area to be taking overall profit. Okay, higher high, higher low. We haven't broken this structure yet. You can see here that these are relatively equal highs. We're going to be looking to attack and make a new higher high, but then ultimately take out this high from March of 2021. Right, this is about a year ago. This is actually, yeah, just a year ago, a year and 4 days ago. So more take profits can be taken, probably 950. 950 is the start of this supply level here, taking out this high, and it's a psychological figure, 95000. Let's just get rid of all this now. Scale back into the 1 hour. Risk to reward, 1 to 9. Look how beautiful that is. So this is what I mean. If you can pinpoint these sort of levels in the market, you can see these high risk to reward trades. And this happens all the time. You just have to be patient. Don't overtrade. Always use good risk management. And I'm telling you guys, you will see success with this. So I hope you guys enjoyed this. I know this was a long video. Thank you guys so much for tuning in. If you have any questions whatsoever, please feel free to hit us up. I'd be happy to answer anything. This is free content. I want you guys to learn this, get excited about this. This is something that has changed my life, and I know it can change yours if you just put in a little bit of, discipline, hard work, and determination into, learning how to trade this particular way. So guys, my Telegram is at Ariel FX Trading. Feel free to hit us up, and I'll be happy to answer any questions you have. But until next time, thank you so much. We have our live session with Trading Nut next Wednesday at 8:30 a.m. Eastern Standard Time. We're doing a huge giveaway. We're going to be doing it every single time we get on a live session, which is every 2 weeks on Wednesday morning, New York session. We're doing giveaways, so it could be easy money for you guys. You just, pay attention, answer a couple questions. We've sent $100 or $50 to 2 people last week on our live session, so $100 total. You could be our next winner. Who knows? Make sure you tune in, and we'll see you guys then. Thank you guys so much.